If you've been in ministry for more than 5 minutes, a donor has probably asked you the question in the title of this video: is my donation tax deductible?
In this video, we're diving deep into what has to be considered before a donation can be deducted. Now, this topic is complex enough that it is impossible to cover everything in a short video, but this will help you and your supporters have a better understanding of what counts as tax deductible and what doesn't. There is a lot to consider when determining if a donor can deduct any given contribution from their taxes. But before we dive into everything, first we have to address your organization.
Does your organization have a 501c3 status? In the U.S., churches are designated as charitable organizations even without the 501c3 filing. However, there are a few benefits to having that filing. Lori, give us the first benefit.
Well, Matt, having a 501c3 status gives your donors the assurance that your ministry is officially recognized by the IRS as tax exempt. For your larger donors, this status is necessary for them to be able to claim this giving beyond the standard deduction.
Your ministry will be able to take advantage of many discounts and benefits which are only available to 501c3 organizations. This includes discounts on services, software, and tangible items. For instance, if your ministry is registered as a 501c3, you can apply for $500 of credit with the messaging platform Twilio. Also, the image creation platform Canva offers the Pro subscription for free to nonprofits. And the best benefit is all the discounts you get through TechSoup. Lori, there's one more benefit. Go ahead and tell them what it is.
Well, Matt, having a 501c3 status in some states can save churches money with state sales and employment taxes. In some states, this can equate to thousands of dollars in savings.
And these are just some of the many advantages of filing your church as a 501c3. If you're interested in obtaining this status for your organization, we've added a link in the description of this video to the webpage where you'll find the form and filing instructions.
This may sound obvious, but it needs to be stated. A person can't deduct money they haven't given. If the person hasn't finished giving what they pledged, they can only deduct what they've given so far, not the entire pledged amount. If they don't finish their pledge before the year is over, the rest of it will be applied to next year's taxes.
This one probably causes the most confusion for members, but before you can determine if a deduction is tax deductible, you have to ask, what was the money for? In other words, was the money given to buy a meal your church served? Did the person purchase a raffle ticket? Or did the donor get something in return for their money? If they did, that would classify as a purchase, not a donation.
That doesn't necessarily mean no deduction can be filed, but it gets a little tricky from here. The donor has to subtract the market value of what they received from what they donated, then they can deduct the difference. Here's an example of what I mean. If a member paid $20 to attend a fundraiser dinner, they would subtract the $12 they would have spent for that meal at a restaurant. That would leave them with an $8 amount that can be deducted from their taxes. You'll definitely want to reach out to a tax professional on this.
Now, FYI, a raffle or any other lottery-based ticket cannot be deducted at all, no matter the market value of anything the person wins or if they didn't win anything at all. I have to admit, this one's tough, but it's really important to address it because I've seen the confusion this causes members with their generosity. The scenario I have in mind when I talk about benevolence is this. A church takes up a collection, usually a love offering, and then immediately takes the money out of the offering plate and hands it directly to a member in need. It's going straight from the donor to the beneficiary.
The reason we're bringing this up is because if your church does this, the members who generously gave can't deduct that offering from their taxes. That's because the money was never actually handled by the church in any official capacity. The best approach is first put the money into a fund managed by the church, then give it to the beneficiary by the organization in the form of something like a check from the church.
Yes.
Now you have a paper trail and the giving can be counted as an official donation.
The timing of the gift matters. If a member sends a check in December that is post-dated for January, the money on that check can only be applied as a January donation.
Though, if the donation is via debit or credit, a donor could give at $11.59 on December 31st and still apply that donation to this year's taxes. In this case, it's the processing date that matters.
For a church or ministry, this is the most important factor when it comes to tax-deductible donations.
Without a receipt, a supporter cannot write off their donation from their taxes. The IRS requires proof of the donation. A letter from the church or charity is sufficient. Donors need a copy of this letter prior to filing their taxes. This is true of non-cash and in-kind donations as well. Whether a person donated cash or canned goods for your food pantry or changed all the light bulbs in the sanctuary for free, they can't write off the market value of their gift unless there is a written documentation that their organization received their generosity.
That's why we've made creating contribution statements as easy as it gets in ChurchTrac. You can even email the statements to your donors right from your account. We eliminate the stress so you can spend more time doing the ministry you were called to do. So if you don't have an account with ChurchTrac, start your free trial today and make the process of managing your donations as easy as it gets.